we anticipate keeping spending at this click for at least 5 years, which, I know we always want to say, okay, we're better than the G7, but we're also a smaller country in some respect in a lot of those countries. So quite frankly, why are we spending at such a high click? And we have to get that down faster. We have to get our productivity up.
Hi, thanks for being there. This is TPL Media. I'm Mike Wixon. Today I'm joined by Paul McCucci. And end of last week, Prime Minister Carney released a spring budget update. And to talk more about that and to see what's really in there in this massive document, as you can see, Paul has done his homework, is the update to that original budget. Of course, on Tuesday, we got an announcement that there was going to be amazing savings in this budget.
11 billion, Mike. So
Ooh.
He saved 11 billion. So originally they told us in the spring budget that we were going to see a $78 billion deficit. He came in at 67.
We'll touch on why a little bit later on in the show. But if you don't mind, Paul, let's establish where we were in the last budget. Give me some of the salient points we were sort of watching over in the last budget.
Well, it was interesting because, he announced that we were going to be hitting deficits in the $60 billion range for the next 5 years. So that was the key thing. We were kind of being preconditioned to let us know that deficits weren't necessarily going to go down. We were going to see them for the near future. But he was going to invest, right? So that was the capital investment, investing in Canada, elbows up, strong Canada, all that good stuff. They do a really good job at the PR work they do on this budget.
Honestly, the packaging of this budget and how they tell it like a story
is beautiful,
yeah,
right?
It's really well done.
Yeah, it is really well done. The group does a nice job on that, which budgets always haven't been this beautiful, but they are well put together. That's why the high consulting costs, I assume.
I would assume, yeah.
Yeah, the way they package it. But
this is terrible news. I need you to package it up beautifully.
But remember, we talked about major projects in the spring, which are back in the update.
Yeah.
Which they do fill us in that they're happening. They did talk about house affordability and affordability fund. Which is still here, and they're still trying to get it off the ground. They haven't really got it off the ground.
Okay, let's take a look at the fall budget. Some of the salient points that we kind of harped on at the time.
Right.
Certainly, one of them was the deficit.
Yeah, of course. The Prime Minister came out and he said, listen, the next 5 years, deficits are going to be above $60 billion. So this isn't something that you better get used to because we're going to have to spend our way out of this. There's a lot of reasons, which we've talked about on previous shows, productivity, et cetera. But he also came out and said, listen, we're going to spend on house affordability. So that's one. We're going to spend on capital projects, these major projects list that we came up with.
Yeah.
And so these are the monies we're going to put into it.
Okay.
And we're going to reinvest in some key strategic areas in Canada. He didn't in the fall talk as much about CUSMA as he does in the update. So now in the spring update, he talks a lot about the fracture between the United States and why we have to spend more, where we're going to spend it. And he starts to talk more in the update about job retraining and all those good things, which we're going to talk about today. But, Mike, before I get into it, he does really emphasize, and when they wrote the budget, which they did a terrific job, marketing wise doing it, they go through a whole laundry list, which we're going to put in this podcast, of things that the Prime Minister and the government's done since they got into office. And I just want to go through them quickly. I won't dwell on all of them.
No, but it's a beautiful timeline.
It really
of
is.
His achievement, right?
So March 2025, the Prime Minister is sworn in. Right away, he cancels the capital gains increase. So that's right away in March. Then speech from the throne, he announces details of the GST relief for first-time home buyers. Then June 9th, a commitment of over $9 billion to meet NATO's target in 2025. So right away, we're going to spend $9 billion. He goes to the G7. He has a meeting on the 15th. We have on the 16th, the launch of the Canada's Strong Pass.
Okay.
And then on the 19th, we have new measures to support the steel industry. So we put some new measures in place. Then, basically, the passage of the One Canadian Economic Act. So that passes on the 20th. The new EU-Canada Strategic Partnership of the Future with the European Union happens on June 23rd. July 1st, the government delivers a middle-class tax cut. And then July 16th, new measures to protect and strengthen Canada's steel industry.
Yeah.
So that's up to July. Then he goes on and he has a laundry list of hiring RCMP, going to Mexico and has partnerships, trip to Indonesia to form an agreement with the partnership agreement, $25 billion to support workers and business impacted by U.S. tariffs. So all told, so by the time we get, to Christmas, we're about $100 billion in expenditures.
Okay, that was my.
So we're spending money we're not fooling around. We're committing money all over. Then coming out of Christmas, we have the Canada Groceries and Essentials benefit. We have the launch of a $6.9 billion automotive strategy. We have a launch of a $6 billion trade infrastructure strategy. We have an agreement on environmental assessments. We have Force of Nature Canada strategy to protect nature. There's a lot going on here in a short period of time. So he's had a busy year. And then finally, the $51 billion Build Community Strong Fund, which we're going to talk about in here.
Right.
So by the time we get to March, we're surpassing $114 billion in 1 year. So, 2025 to 2026, basically committed $114 billion out the door.
He has been really doling it out.
Doling it out. But here's the challenge, right? And this is a very interesting part, right, of what we're seeing in the U.S. and we're seeing in Canada, because this is kind of the thing that's coming back a little bit on the U.S. side, because remember the president of the United States, he was sitting there signing all these orders, executive order, executive order, executive order. The problem is there's a lag time.
Of course,
right?
Everything has to get put into practice. It has to be policy created.
Yeah, I commit money to all these projects, whether they're, hiring 1,000 RCMP. Well, these guys got to be hired. So you have to get that done, which is a huge task. Then they have to be trained. Then they have to be outfitted. Before they even get deployed, there's a huge economic stimulus that has to go into place to get them into field.
Into the field. Yeah.
So, and now talk about building something when you have these major projects. You can go put, $50 million into a mine, but then quite frankly, it'll take another year before people even get the equipment to the place, get to the mine.
Engineering is usually at least a couple of years to understand what can be built there structurally.
Exactly. Now, we have this unemployment lag where we're seeing unemployment numbers bouncing around, all these, they want to create new jobs, but you're not seeing the correlation between the spend and the jobs right now. You're seeing a mismatch, right? You're seeing a very narrow focus of spending, but you're not seeing a huge impact right now. Now, hopefully that'll catch up, but right now we don't see it.
At the moment, it's all been committed, but we have to wait for it all to actually begin to happen.
Exactly.
That's the problem, Paul. You get these commitments in place and they extend beyond the term of the government that put them there in the first place. We spend all this money moving it along, and the next government comes in, maybe it's a converse government, and they put a halt on it or whatever the case, and we have another EV disaster on our hands.
Well, pipelines, right?
Right.
Look at the XL Keystone pipeline saga, right? We went through that for years. Now it's back on the table. Trump is now saying the pipeline to Wyoming, they want to get going again. We're kind of wavering a little. We haven't really said where we sit on it right now. We're waiting for the Kuzma negotiations to happen. But yeah, that's a case in point where government changes, a whole program dies. Acres and acres and miles of pipeline
sitting there,
shelled. Yeah.
Okay, let's have a quick look, if you don't mind. Now, we got his report card,
right,
which he presents as his self-evaluation is admirable.
Mm-hmm.
We know what he spent; it's pretty significant so far.
Yep.
But then the next thing he does in this budget, really this update, is compare us to the rest of the world, which is an interesting thing, actually, Paul.
Yeah, we always do that, right? So we always say, where do we sit in the G7? Which I always find it interesting because the G7, pretty much for those of you, the key members, France, the UK, Germany, Italy, Japan, right? And they're pretty much a disaster, a hot mess, right?
It's very interesting how they've lowered the G7 bar overall.
Oh yeah. Well,
over the years, it's a great brand.
I'm going to throw this up, and actually, it's a great slide, and it actually shows the net debt to GDP, and it's a ratio they do for the G7. And it's when you see it, it says Canada's net debt to GDP is only 10.2%. But then when you look at the rest of the G7, look at the G7. It's a hot mess, right? With Germany coming second to us at 47%. And then everyone else is roughly 100% or more. So the UK, the United States, right? So really, they overspend, they're like drunken sailors on the ship. They're spending as much as they can. Yeah.
And
quite frankly, so comparing ourselves, this is not a good comparative, right? And quite frankly, I'd love to actually take some of these graphics and show our US cohorts and our UK cohorts and say, is this really indicative of what's going on in your country?
I wonder that.
Yeah.
It feels slightly, well, don't forget, it's contextual.
Yeah.
It's up against the G7.
Yes.
Right? So
exactly. So we're doing better than countries that basically spend 100% of their GDP on debt.
And there's a huge divide, of course, between us and them doing that. But it just shows you that places like the EU are really struggling right now.
Right. Yeah. Well, we can't even imagine how unproductive they are. But when it comes to productivity, the productivity factors, they're more productive than us. We're just blessed with the resources that they don't have. Right. So they're countries that have more innovation, more technology.
Okay.
Which is interesting because he's saying now, so this is the prime minister is coming out and he's saying the investment flows per capita are now surpassing the US. So what should happen now, this is interesting, and this is in US dollars. So he's saying, I went out, I met with a bunch of countries are starting to invest in Canada, the direct investments. So we should start to see the productivity increase in the country. Now, I hope he's right.
I do too.
Again, that's the lag we're starting to see. We haven't seen that. Now, they are saying that that's happening, but we did see this. Remember, this is kind of I hate to draw the analogy. This is a little bit of the president of the United States standing on the podium saying, I've signed up, this company to build this plant. I've signed up this person to come here. It just doesn't happen overnight, right? It takes time. So he's saying that he's locking in this investment in Canada, and that's going to happen.
That investment has to go back to the shareholders of the companies that are managing those investments abroad. The stock market is up and down and all over the place based on the maneuvering in the world right now that has to be done around a war, tariffs, and everybody trying to reset what they're doing in trade. We're in a position at the moment where even kind of addressing that seems like an unrealistic thing to do. You know what I mean? Like,
it's a wish list, right?
Yeah, it feels like a wish list because by the time it actually arrives, as I say, we're several years down the road, it feels.
Yeah, it is. Yeah. And it's quite frankly, because right after that, they post the slide where basically our deficits going forward, projected deficits, 67 billion this year, 65, 62, 58. So we see these deficits still being around the 60 billion mark. So you ask yourself, why are we not seeing the returns sooner?
That's a great question.
Right.
That should be diminishing. I mean, and it does, but not to a degree that
it's a slow boat, right?
And it's not like this budget is conservative in any way. He's really extrapolating a lot of profitability and growth in the country to convince us that this budget is worthwhile.
Yes.
So you would expect that the deficit would be really coming down at some trajectory, and it doesn't.
No, we anticipate keeping spending at this click for at least 5 years, which, I know we always want to say, okay, we're better than the G7, but we're also a smaller country in some respect in a lot of those countries. So quite frankly, why are we spending at such a high click? And we have to get that down faster. We have to get our productivity up, as we always talk about.
Does productivity answer that? Is that the solution?
Oh yeah, for
to
sure.
that 100%? Yeah.
Yeah. Well, what's keeping our productivity down? Technology, capital investment, skilled workers, all the things we don't have right now. We have to get those in place, and we got to get producing things rather than selling raw materials, which we're going to talk about later on the show. But we can't just go getting companies to come in and buy all our natural resources. It just won't work.
No.
We're going to be shelled as a country. Yeah, we'll have jobs. We'll have jobs, but from companies that are owned by foreign workers, which, on the show we did last week where we talked about the wealth fund,
Yeah.
it really is a key issue for Canada right now. The wealth fund's a great idea. If it's managed correctly, it has the right conditions, and if we keep co-ownership with foreign companies in our resources.
Well, it's interesting that you say that, because we're just, our team is researching a new show upcoming this week about the 407.
Right.
And
Oh, yeah.
you take a look at the billions, and I mean hundreds of billions of dollars of loss that we have taken on that nobody even talks about anymore, just on that one project. So you hope that these investments are carefully selected, that they're actually, the red tape is being pulled out of the way so that our resources can be utilized properly, so that we can actually get to producing stuff. Like you say, handing off raw materials to the world is bargain basement.
Yeah, it is. And quite frankly, the interesting part of that show, which I won't say too much about today, but the announcement that they're looking at selling airports. Oh my goodness, you got to be kidding me. Like, you're really thinking about that?
Yeah.
Like, after the disaster of selling public assets, and we not learned any lesson?
And not to mention, but the last guys that bought the 407, frankly, owned a lot of airports, and they kind of knew what they were doing. And they took advantage of us in that deal as well.
They did.
Okay, so let's take a look now. We've compared ourselves to the rest of the world. Anything we missed on how braggadocious we became at that moment?
No. Well, one of the things that came up, which I thought was interesting, he wants to work with the CRTC to actually lower mobile phone plans. Mm-hmm. So that was one thing that kind of popped out. We did talk about it in the fall budget, but now in the spring, we're actually starting to do some comparisons, which, we all know we pay too much for cell service, right? Way too much. And we took a look at, plans in the US right now. So for 100 gigabytes, they're around $32 a month.
Okay.
Yeah. We're trying to attain $75 to $85 a month.
I was going to say, I think I'm in and around $100 a month for my cell phone, everything in.
Yeah,
That's crazy.
For a family, we're like $300 for three, so about $100 a person, which is crazy. But they're trying, but they're still trying to get to roughly 2.5 times what Americans pay for cell service. So that's the goal.
Oh, John Tory's laughing. I can hear him all the way downtown. I don't know that they'll rein in the the mobile companies. And don't forget, that's a hard deal to make, because they have a huge amount of infrastructure built in to our country.
Yes.
We rely on, and we did this to ourselves in many ways. We rely on the CRTC's ability to only license to major players that are able to, absorb everything smaller than them within a few minutes, and even recategorize. There are cell plans you can get for $32 a month in Canada, but I don't even know if you can call across Canada with them.
Well, the funny thing is we love our monopolies and oligopolies, but we now, on top of that, which is kind of totally converse to the thinking, we want to sell our public assets. I find it a little bizarre. I've always have, as a Canadian, I've always thought, why do we think this way? But we seem to, that's something we seem to enjoy.
Okay, I don't mean to drag you through this, so let me get to the next part, which is basically the new programs, the Build Canada Strong Fund, and the adjacent things. Take me through some of the key points there, if you don't mind, Paul, because I think this is where this is sort of the new meat on the bone. Yeah,
a little bit of it. Well, of course, we talked about the wealth fund, right?
Yeah.
So the wealth fund's the big one in there, and really, we're trying to put 25 billion into a wealth fund. We're trying to set up the parameters of the fund, and we're trying to get Canadians to start to match some of that investment and get some international spending into it.
By the way, I wanted to ask you this, Paul. How do we get Canadians to participate in this? Will there be a way that we can add this to our own portfolios?
Yeah.
It'll just become a publicly traded option that we promote to Canadians to support our own country.
Yeah, it'll be like an index fund that you actually go into. It throws a return of 7 to 10%. It's probably a good thing for most Canadians.
Yeah.
They'll understand it. Hopefully Canadians will take a bigger interest in the projects that are in Canada, the major projects. Mm-hmm. And hopefully as we get more money into it, we reinvest in those projects, which all good ideas. It's how we orchestrate it and the conditions we put upon it.
Okay.
Yeah. So now the interesting part now that we look at, so the this is my concern. So just on some of the new spring announcements, they talk a lot about, getting 100,000 people, skilled workers trained up, and a significant outlay, like really significant. They talk about billions of dollars for training and everything else. But it's interesting, Mike, because it just came from a show earlier on where we have 2.3 million new Canadians or new immigrants in the country who've went to school here, wondering what's next for them, whether they're going home or what's happening. Yeah. It looks like they're going home, quite frankly. There's no real plan to keep them here, train them, do anything with them. So on one hand, this is kind of where we never get our story straight, or we never get a plan together. We have 2.3 million people who've come here, paid money to, let's call them educational institutions for the most part. I don't know what they are, but they've come here, they've paid the money, they've worked here.
Oh, some of those things that they signed up for were so sketchy to start with.
Yeah. So now we come out with this and we say we're going to put all this money, billions of dollars, to retrain people. Are we trying to attach these people to that training, and what type of training? We don't really ever think this through. So my worry is, in this spring budget, we're saying, okay, which I understand why he's doing it. I understand why the Prime Minister is looking at it as a key element, because he's got all these major projects. He wants to build a bunch of things. He's got to get going. He doesn't have the skilled workers to do it. We try to actually throw affordable housing up there like we did in the fall budget.
Yeah.
Affordable housing has a lot of warts, and he knows it. He knows that potentially building more affordable housing will even sink rental rates even lower, because now you're having the government compete against the private sector for rental properties, which is a very precarious situation. I think they're kind of dabbling in it. They're looking at it. They're saying, oh, wow, how do I kind of figure this out? So no, I got to get these other projects working. So I'm going to try to get skilled workers, because of the baby boomers and the skilled workers in Canada right now, they're all aging.
Yeah.
I need to actually put some more money there. So they put some more money there, but do they have the bodies to do it? And so they have apprenticeship programs, they have education programs, they have all these programs. But traditionally, the sad thing in Canada, most of our training programs become boondoggles for the provinces, right?
The provinces don't necessarily make great choices.
No, they use it. They use it for election favors for the most part. Let's call it what it is. It's a boondoggle for the most part. So in Canada, traditionally, training monies has been used for kind of boondoggle money. It's gone out the door. And so maybe the reason I did the immigration show earlier, maybe that's just going to happen again, and they don't really foresee anything happening with this training money. So therefore, they're not attaching it to the new immigrants that are waiting around to see what happens. I'm very curious that they haven't attached it.
It's a bit nebulous as well. Like that they haven't attached it is one thing, but that it's fairly nebulous in what they're going to do with that money and how it's going to be distributed.
Yeah, which it always is, right? So then these programs show up across the country where, certain groups get the money, and, these centers show up, and a bunch of guys show up in the morning and they get, they get a hard hat, a pair of work boots, and a lunch pail and a hammer, and then they say goodbye to them, and then they go pick up their money. So it never helps, because quite frankly, you don't get skilled trades, and therefore you don't move forward.
The other thing is when we're talking about trades, I'm sorry to keep stopping you along the way, but it harkens on other shows that by the way, subscribe to the network. Because a lot of the stuff we're talking about is attached, connected directly to other shows we've done. And this is one that comes to mind when it comes to housing and retraining. One comes before the other, I think. I think you need people working before housing starts to take care of itself. We seem to want the government to step in and take care of our inability to buy a home, when what we really need to do is get productive and get back to work, doing things that are higher paying jobs, more stable careers. And I hope that that's the mission overall. I don't know if retraining does it, because you point out the fact that it often gets misspent. It's money into the wind.
It's a small stimulus that usually goes to a very few individuals.
Small group of people.
Yeah, a small group of people. And that's traditionally what happens in Canada. We all know it. There's no,
but I think it's a misnomer to say.
No point in trying to hide it anymore. We know what happens to the money, right? So, and it's unfortunate, but it's happened for decades, and people just, I think they've got tired of it, so they just kind of turn a blind eye for the most part.
I think it does happen. I mean, until it gets so ballooned out of control that we then ask ourselves, how did we let this happen?
Yeah, then it's, on the floor of some provincial house for a couple of days.
Then it just vanishes.
Then it vanishes, and we do another program the next year. So, but Mike, it's very interesting because the idea, the concept is solid. So I understand the concept. The concept is that we have all these projects, and we have them all across the nation now to build the infrastructure to do the projects. And I think that's where the missing link in this budget, which I said was the same missing link in the fall budget, is they need to connect them now. So if I have a capital project, a mine, a plant, or whatever in another city, and I don't have the infrastructure to locate the people,
right,
I first have to move the trades and the companies that construct into those areas, incentivize them, get them to build so people can go live there and survive and enjoy and have a family and a schools and everything else and grocery stores. And then, quite frankly, I can move the people into those areas, and they can start to flourish by building the properties. Similar.
Yeah, they can create new small towns.
Listen, we did it
mining
in
towns.
We particularly did it in the 30s, 40s, and 50s. We were good at it.
Yeah.
At one point, we were good at going in the north and building towns and infrastructure.
My own family relocated to Timmins. It was a mining town. There was another part of my cousins and my aunt and uncle were military, so they followed that route. Yeah.
Well, let's talk about military, right? A huge part of what's coming up, quite frankly, and sectors that we're spending over $25 billion on. The first one is defense. It's $7.7 billion. We're spending it right now, and that's, you can see it, right? We're starting to fix up bases. We're actually, buying planes, equipment, everything. Every week we're seeing another announcement on defense spending.
It's true,
which is something we're doing. But again, people and marrying those people to the project, to the expenditures is the challenge right now. And that's the disconnect. That's where we need to get better at it, right?
Yeah, it does feel that way.
Yeah.
On the major projects, okay, so you've got defense, industry overall. The strategy there is basically to support tariff-laden industries by the looks of things like steel, farming, automotive,
yeah,
all of those sectors.
Well, we're spending out of that $25 billion that's going out right now is 6.9 of it is on automotive, which again, I'd like, to sit down and fully understand, which it's not in this budget. It's, they talk a little bit about it, but they don't talk about what's going to happen to automotive. I think we're waiting for CUSMA. So we've allocated some money. We have a relief fund going to the automotive workers. We have and the employers to say, hold on to these people till we figure out what we're doing in the summer. So there's kind of like a hold fee being paid right now.
It's kind of what it feels like.
It is. It's like construction when you're trying to keep that construction manager and you say to them, go home for 3 weeks. Here's a hold fee. So just stay at home, wait for my project to start. So they're kind of doing that with automotive. You can see it circling. And they're talking more about electric vehicles. Yeah. They're talking about what's going to happen. But it really is the missing link. If they're going to try to rebirth auto in the country, I don't know if it's sustainable with only a couple million cars sold a year. Maybe it is, maybe it isn't. But
somebody pointed out, and I saw this in the Globe the other day, that our automotive might become more like Mexico in the sense that we might be parts manufacturers. We might be component manufacturers, maybe the battery element of it. But you're right. There hasn't been, and even from the auto industry, there hasn't been really any talk of what the strategy is. And I guess CUSMA is the hold.
It is the hold. So that whole group of people, that the committee that they put into place with, Dominic and LeBlanc and the group that's continually going to the U.S., not making a lot of headway right now. They're going to come back and tell us at some point if that is even going to happen. But, just keeping in mind that the U.S. I think they're got their mindset that automotive is going back. And the more, I listen to stuff in the U.S., the more they're talking about the rebirth of the auto town and the auto sector. And for those of you, most Canadians know how auto parts is essential to Ontario right now, but those, Magna plants and everything going on with that group, where they're going, how they're going to survive, what they're going to end up making, I'm sure they're waiting through the summer to see.
And once again, CUSMA must be the link on that because, of course, Mexico is the other hub. We develop it here, we get it manufactured there, we do parts assembly here, but will we get back to building entire cars, or how will that look? I'd be very curious to see what the plan is.
Yeah.
Once again, I don't think we'll hear anything until CUSMA.
No, so that's sitting. Basically our critical minerals strategy. That's another one. We're going to talk about that in a minute. Really hasn't been well defined. We outlined the projects. We outlined some of the things we're putting money into, but we've allocated $5 billion for critical minerals. Now, what's going to happen with that, where it's going to be spent, when it's going to get live, that's another thing that we're waiting to see.
And of course, clean energy was one of the topics that came up here.
Yeah.
Okay.
Do you want to talk energy or clean energy?
That's kind of my question. I mean, we really right now are being propped up, as we'll talk about on this budget, by oil prices at the moment.
He caught a break. Well, not a break. The world sort of sent this budget a little bit of a break in an unfortunate way. When the war in the Middle East kicked in, then quite frankly, everyone knows they're paying at the pump. Oil skyrocketed, which then meant the fees that come to Canadians through the distribution of oil, that just blew up, right, to the point where it's actually cut our budget shortfall by about $17 billion.
So the question arises in my mind, can we as Canadians have that money, please? Because it's cost us so much for gas. Couldn't you, isn't there like an immediate correlation that you could make instead of claiming that your budget is going to be less in deficit? This is an emergency for Canadians, and he's using that money to offset a deficit at a time where this really could make a difference at the gas pumps for Canadians and for business overall in Canada. Yeah, no, it is true. So, the interesting part is we ended up having a deficit of $67 billion. Mm-hmm. So, but that is primarily because we had $17 billion of, revenue come in from oil. Yeah. So 84 billion. So our deficit was really 84 billion. And then we got 17 billion. Hold on a second.
We had budgeted for 78 billion.
Right.
So we really are 6 billion over. Right. I know we want to make we did better than we thought. And
no, we don't want to do that, Paul. Why are they doing that? That's not ideal.
The joy of numbers sometimes, right? They can show one thing, but the reality is, the oil and gas prices have come back. Now we have taken some of that savings. So, the Prime Minister and Liberal government have tried to take some of those savings and put them into programs to help Canadians of lower income. Right. Even all Canadians, with reducing the taxes on gasoline at the pump and some of the food programs that you're getting, food rebates, GST rebates. So those have actually come back to Canadians. The problem is you add all these other programs, whether it be the wealth fund, whether they be jobs training, all the things we're spending in addition that we didn't budget in the fall. are actually coming to roost now and actually driving that number higher. So we've exceeded the deficit that we originally have, and then we deducted the $17 billion off for what we got in oil revenue, and voila, we have a $67 billion deficit.
I've seen this kind of math before.
Yes.
Okay, let's take a second and drill down, no pun intended, on some of the major projects that were outlined for us in the plan by the Prime Minister. Where do we stand with those now?
Still going on, right? And we've committed 6 transformative strategies, 15 projects, 60,000 jobs is what they're calling for. Again, these don't happen overnight, and it's an expenditure for Canadians of about $125 billion. So, this is in LNG. It's for the Nickel and Crawford project that's happening up in Timmins. It's for the Darlington nuclear plant in Bowmanville. It's for the mines in Quebec and Alberta, and the Tolston hydro expansion and Great Slave Lake in the Northwest Territories. So, these are 15 strategies. They also still have slated the Alto high-speed rail train.
Yeah, I noticed that was still on the list.
And, the corridor for conservation, which is in the Northwest, British Columbia, and the Yukon. So these are all things, and Churchill Plus, which is in Manitoba. So a lot of projects still slated, slow progress. So, but they're on the books. They're referred to, and the major projects office that have been set up are managing them. Now, on the critical minerals front, there's an investment that's going on now. It's not as substantial as you'd think. So, Canadians always think, oh, we're into critical minerals. We are making, as a country, we are making an investment in critical minerals. But, graphite mines in Quebec, quite frankly, we're loaning $462 million in debt servicing to finance. We have 149 equity financing in it for the Nouveau Monde graphite. So that's happening. The Rio Tinto project that's happening in Quebec, we're making a $25 million investment in as a country. Titanium or lithium in Alberta, that's a project we've talked about on a previous show with Stan. It's a good project. It has a lot of challenges because it's new technology.
These are all loan mechanisms, Paul?
They're loans. There's some equity. There is a high component of equity, but it's not I thought it would be a higher amount. And I'm always kind of surprised we talk about how our critical minerals are a lifeline for a country. I think we need to reassess whether we're making enough of an investment and what we're going to do with them. So, it's one thing to say you have critical minerals. It's another thing to say how you're going to process them, where you're going to sell them, what products they're going to go into,
right,
and how they're going to make you a powerhouse. Again, I don't mean.
Well, you would hope that these various arrangements that have been made around the world by Carney at the moment position us well with those resources. You hope. But, once again, we don't see that yet.
And on previous shows, we've talked about it, Mike. A lot of these resources and these critical minerals, countries have already leapt ahead of us. So
Australia's
we're slow to
killing it out there, for example.
They are, and we talk about it on previous shows, how, China, Australia, whether it be lithium or it be graphite, all these materials are already being mined in other countries in a substantial way, right?
So we've got to do startup. If you look at it from a business standpoint, you get into startup mode, spend a lot of money, enter the market late. So you have to enter the market at a lower price, generally speaking. There's no other way to win.
Yes.
And then start to build your way back and become, existent in that industry. Not even just a winner, just existent ongoing is a huge front load of debt and investment.
It is. And quite frankly, you need to create it. We've talked about this before, but you need to create it as almost its separate project and almost set up a command post to make it happen, because the urgency is critical. It's not like critical minerals, but it's critical that we get going on this, because quite frankly, the world is starting to pass us by because we're moving at a too slow a pace on this. And when I look at the investment we're making, my one recommendation coming out of the budget is we put more money into this. We put more money into the mining sector for the critical minerals that build Canada today. So what are the things we need to use at home, whether it be in defense, whether it be in housing, whether it be in electronics, manufacturing? What are the critical minerals we need to get in place today for our country? And then what can we sell abroad directly? What contracts can we get in the short term? And, you know, that's the challenge, because as we're doing it, you got to imagine there's a bunch of other countries doing it. And, you know, not to totally unrelated, but before this, we did a show on immigration. It's a great show, but it was a scary show, because as we're creating an immigration policy, the EU is already ahead of us, and they've already got an immigration policy that they've deployed for the people that are kind of abandoned in their country. So they're already rolling out theirs. We're just starting to figure out what to do. So again, as Canadians, we got to be moving at that pace.
An interesting way to position this budget is to take a look at it from that perspective, that the rest of the world is also rebudgeting, realigning. Certainly everybody in the G7 is doing a realignment of how they spend and what they spend and how they're going to fortify. So you hope that our plans lock like Lego with some of these alliances that we've made out there, and that, by the way, Kuzma comes up and doesn't throw a wrench, no pun intended, in the mix.
Oh yeah, for sure.
And change some of these plans.
Yep.
The next thing on the list for me was the section talking about benefiting Canadians. What does this section do that is significant, really?
Well, there's a bunch of stuff, Mike, and I pulled it out because there's a laundry list of I call them small changes, but they're big in everyday life for people. So basically, middle class tax cuts for 2-income families up to $840 this year. So we're going to see some tax changes. First-time home buyers are saving up to $50,000 for GST on new homes. So we knew that one. That one was an adopted conservative. Remember, an adopted conservative program. The removal of, well, we keep saying this, consumer carbon price, driving gas prices down almost 18 cents. That was one he did right when he got in office. That was his earlier.
Major,
Yeah, and that was, basically that was a conservative policy that he conceded to, but, they still complained that he didn't take it off, the carbon tax off industrial. Basically reducing gas station gas tax.
Yeah.
So dropping 10 cents a liter. Can you imagine now if he hadn't done that, what we'd be paying?
We'd be well over $2 a liter, yeah.
That's crazy when you think about it.
And we could still get there. Imagine that. So we'd be closer to $2.10, $2.15 a liter by the time,
Yeah, 12 million people are going to receive hundreds of dollars from the grocery and essential benefit plan. So they're like usual. We're going to get, some of us are going to get a check in the mail.
$38 or $40, whatever.
I think it's going to be several $100s. So it's going to be a little bit, but that's kind of a stopgap for what we're seeing. So if you think about it, we're going to take in $17 billion, from what we earned from paying higher gas, and then we're going to redistribute some of that back to lower income families.
No, Paul, but that money is already spent, don't you see?
Well, it was.
It's not a saving.
No, it wasn't saving. We changed some of the, which I thought was a good thing. So banking fees, we put caps on.
I saw that. That is a good thing.
Which is good. So I think that was something that was getting out of control.
Many countries, I think we're following suit. Many countries have also enacted that.
So
in the G7,
NSF funds only have a fund a charge of $10. I think it's capped. And 50% more debit transactions at a cost of no more than $4 per month.
Right.
So we capped the trans. So those are some good things. Again, we talk about skilled trades programs and automotive federal benefits, basically for about $5.5 million of low-income Canadians. So that's a good thing too. So, we brought back the strong Canada Strong Pass for people exploring Canada. So I think that's good to get some tax benefits. And of course, a much needed tax relief for Canadian brewers and wine distributors.
That was a good one to read in there as well.
It was.
Because that has been, there's a struggling group right there.
Oh, my goodness. Yeah. people
the
are,
industry shrinking to begin with, the border, our sale to the U.S. so heavily impeded. That industry really, I think, was hanging by a thread in many ways, and I could be wrong, but it sounds like the right decision there. Disability became in this making life more affordable aspect. Disability,
we sped it
got a
up,
nod.
made it easier for people to get disability benefits. I think all parties were really happy about that in the budget. And I know Pierre Poilievre commended Mark Carney on doing that. So I think that was, both parties thought that should happen.
It was decent, yeah.
Yeah. And can we talk a little before we finish up? One of the key issues that we really don't talk about enough is the $51 billion we're putting into infrastructure investment. So, this is the money we're going to stream into our provinces, our territories, to do roads, bridges. So that's the downstream funding to get our infrastructure back. And this is a unique opportunity for us to do that. So, in bad times, we've been through it in our lifetime, Mike. One of the key things is to get people working by doing these big infrastructure programs. And also take the time to reinvest in some technologies that speed them up, right?
Absolutely. Highway construction is a great example of that.
If we have $51 billion, my advice right now is not only to do this and put the money out there for equipment and people and everything else, let's actually enhance our technologies to do this in the future going forward. So
that's a fantastic idea.
It doesn't take a year to build a road. It doesn't take, a year to resurface a bridge. It doesn't take... And that's all technology, equipment, and all those enhancements that we can get and develop and help companies flourish.
Have you seen some of the construction advancements that come out of China, for example, and the way that I think it's Japan that is building roads out of recycled bottles somehow. Like, sorry if it wasn't Japan, but I just saw
it is.
And I thought to myself, wow, they've really come a long way, because the durability of these roads, let alone stopping the fill of land. What an incredible, but they invested in the technology, as you point out, to be able to do that.
They did. And I think now that we're doing this, I think we really have to think through, what are we going to do? Again, this is the disconnect. And when we do these budgets, what roads, highways, bridges, water, sewer are we going to put in, and where and why? And what does it do to increase our productivity? And what does it get us to? What can we get out of that region, and how we're doing it? It's one thing to take all your money and throw it into the major cities. Well, the major cities, quite frankly, they have manufacturing, they have people, they have finance and housing. But if they're not increasing our productivity, then that's not where the major push should be, right?
Right. If we're trying to do mining or build or whatever industry, we're trying to retrain people, stimulate that industry, take that sector. That's where you're saying we should be building this infrastructure.
And
makes perfect sense.
Equipping our companies to actually help and grow and diversify to do that. So, if we identify a company that actually, is doing, road asphalt or whatever, can we get them to actually look at a new technology? Okay, let's put some money into that company and investigate new technologies from around the world that are faster, better, more durable, last through our winters, don't erode with salt. Those are all the things that are being tried and tested in other countries. And that's where we need to kind of move forward to get our productivity higher.
Sounds like solid advice. I'm sure you took a look at the financial statements.
I did.
Anything squirrely in there, Paul McCucci?
No. There's some, of course, we do have, as we talked about, on our previous shows, our elderly benefits, just to focus on them. But we're growing up past $90 billion a year. We have an aging population. I think we all know that. Yeah. At some point, we're going to have to address this issue, right? I don't think that's any surprise to anyone that we're going to have to look at that and figure out a way how we're going to adjust as time goes on. Because the increase every year is quite substantial, right? And so I understand it's a big voting block, but quite frankly, it makes up, out of our direct expenses for the Canada, it makes up almost 2/3 of our direct expenses from a Canadian budget perspective.
Not reflecting 2/3 of the population being of that age, of course.
Exactly.
Retrain.
25% of our Canadians are above the age of 65, right? So it's disproportional and it grows at a substantial amount every year above inflation and above CPI.
It's funny, until you mention it when we look at the budgets, I forget about how serious that is for this country and many other countries right now as well. But that aging population, and we've thought about it for years, Paul. Like how many years ago did you start hearing, oh, we've got an aging population, we need to repopulate, we need...
Oh, yeah.
I mean, it's been years and years now.
Boom, bust, and echo. Remember the book?
Right,
Yeah.
right, yeah.
Yeah.
So anything else in the budget that kind of...
EI, EI, we continue to budget a significant amount of increase for EI. I think we all realize that we are going to see a significant amount of unemployment coming up. It's kind of hovering. So if it really becomes how fast we can get these projects into play to get this number down. And then, healthcare transfers, they're not going up. So we have we've stabilized our healthcare transfers. We're not doing anything more on the federal level.
I'm a little shocked by that based on the feedback that we get from Canadians about the healthcare system.
Yep.
But okay.
Yeah.
Yeah. I mean, if we're not increasing spending, I guess that's a good thing. I hope that means that we've also solved the healthcare problems associated with, all of these major critical complaints that we've heard over time. Hallway care, huge wait times, surgery wait times, all of this sort of stuff. I don't know that has been taken care of yet. I don't know if money is the solution to that.
Yeah. So we hover around 60 billion from the federal government on healthcare transfers a year. That's flattened, quite frankly. I don't think anyone anticipates from the provincial. I know most provinces have really said to the healthcare sector, hey, we're done.
Yeah.
It's going down. It's got a dip. They can't provincially go any further. And from a federal perspective, they've capped off. So, we have an aging population. We have a stagnating or flat healthcare expenditure. It's one of the bigger issues that's upcoming in Canada we don't talk about. From a revenue perspective, they've done a good job of keeping corporate tax for corporations and small businesses flat. I think they've done a decent job. They continue to actually show a increasing personal tax revenue increase.
Oh, okay.
Yeah. So that continues to grow every year. We see that kind of clicking up. It's interesting because we now have a conundrum where we have an aging population, less people paying a higher amount of income tax. We have a bunch of new immigrants who are leaving, right? We're exiting. And therefore, we think our tax base is going to go up. I don't really understand. I've looked at the assumptions around the actuarial assumptions that are based in that number. I don't tend to agree with it, but that's the assumption they make in the budget. So just be aware that could be a number that we see change throughout the next couple of years and hopefully won't go down substantially.
That's a pretty cool observation actually to make, because you're right. This kind of shows where the extrapolation of projection on these numbers can meander a little bit.
Yeah. If we have 2.3 million people exit the country and we have a bunch of people crossing the finish line that are leaving the workforce, hopefully they stay in Canada and retire in Canada. If they decide not to retire in Canada, we'll lose some of them depending on where they would go. I don't know where they'd go, but that's a challenge. And we have to always keep that in mind as we're doing these. But so we have some, as we go as a country, we have some definitely challenges, housing affordability, quite frankly, from this budget. I still, I mentioned it before, I still struggle with some of the logic on why we're spending some of that money. I think it would be best suited other places. But
once you stimulate an economy and people have money and they have jobs, homes begin to sell again.
Yes.
The market opens up to people pre-buying homes, which I think is the major stagnation right now, is nobody's getting in on pre-sales. No. Certainly condo pre-sales are dead. Subdivision pre-sales are at their all-time low over the last 10 years. Yeah. So
delinquencies have actually almost doubled in like 3 years. So we're seeing more and more, even, we just did a show. We took a look at Brampton, for example, being the highest delinquencies in Canada right now for power of sales.
Yeah, a lot of mortgages were written up there that didn't make sense. You could feel it. These were monster homes at huge rates that, selling prices that were outrageous. So not surprised actually to see that. But once the economy is stimulated, once we are productive, that's how housing becomes accessible to people, not through building. I don't know how the government does this except offset. Okay, taxes. We'll take the HST off up to 50. I mean, that spreads out into billions of dollars, but to the average person, it doesn't mean much if they don't have a decent paying job.
Exactly. And I think honestly, Mike, the government and the prime minister right now, that's the biggest challenge, that is to get his caucus, to get his ministers into play, to try to figure out what to do to stimulate each of those areas and actually try to integrate them. It'd be interesting right now. I know they love committees and they love to form things. It'd be interesting to try to figure out, for the government to sit down and try to figure out how to integrate all these ministries into one integrated strategy on where to go. And, we did a show on Norway the other day. And after we did the show, I came away and we were talking about the fact how they created Equinor, they created a wealth fund, and they grew and grew. And, you came away and you thought, wow, that is a real strategy of a government talking about the long-term viability of their country.
Yeah, and every party that comes into power stays with this constitutionally so that forevermore that country can grow.
And the citizens will not allow them to change it.
No.
Yeah, because the citizens have seen the benefit of reaping the rewards of the oil in the country. We have the ability. It's not too late for Canada. We can do this. It's just getting the integration in place to make that happen and getting everyone to buy into it.
There's your spring budget update, Paul. Thanks for tearing it apart. And by the way, in case you wonder how big that budget is, this is the working document that
167 pages.
Oh, thanks.
It's a good read.
Yeah, well, for you. Thank you so much for making it clear for all of us, though. Don't forget to subscribe. Tell a friend about where you saw the video. You can share it, of course, comment. And if you would like the notes that Paul made for today's show, we'd be happy to send those along to you. So just reach out to us. Visit tplmedia.ca. Thanks. We'll see you next time. Thanks, Paul.
Thanks.